Crypto fam, this is the biggest movement in institutional adoption ever. $1 trillion could soon redirect to the Bitcoin and crypto. It starts with your 401k. Of course, yes, you had that right. Bitcoin is now legal in retirement account. This is not a visual headline. An executive order just dropped that opens the floodgates for 401k to invest in Bitcoin, DeFi, real estate, and private equity. You name it. This is the moment our crypto dreams turn into mainstream reality. So what does that mean for the Bitcoin price? The beginning of $1 million price target, altcoin seasons, and so much institutional firepower moving in. Stick around, let's unpack this fully. Welcome back to Crypto Buy, the place where we don't just talk charts, we decode the biggest crypto trends, uncover hidden altcoin gems, and break down world-shifting events into real strategies you can actually use to profit. In today's video, we are diving deep into some massive moves shaping the entire market. The 401k revolution that could make crypto truly mainstream, legal, legit, and possibly one of the biggest financial shifts of our time. So why Bitcoin could realistically push past the 1 million mark in the coming years as new waves of institutional capital pour in, and how altcoin season is hitting up fast, with projects like Ethereum and Solana, and others setting the stage of explosive gains. If you're new here and haven't subscribed yet, make sure you smash that button, because the next few months could define the future of crypto, and you don't want to miss it. As you know, on August 7, 2025, the President Trump signed the game-changing executive order titled Democratizing Access to Alternative Assets for 401k Investors. This was not just another policy headline. It marked a historic shift in how retirement savings can be managed in the United States. So here's what actually changed. For decades, your 401k choices were basically stuck on repeat: stock, bonds, mutual funds, and maybe an index fund or two. Safe, predictable, and honestly kind of boring. But now for the very first time, cryptocurrencies like Bitcoin and even alternative investment such as private equity, hedge fund, and real estate can legally be added into retirement accounts. As long as they get fiduciary approval, this means the very same funds that used to avoid anything outside Wall Street's comfort zone can now diversify into digital assets. Even bigger, the US Labor Department officially walked back its previous extreme care warning in the past. So regulators made it clear that digital assets in retirement plans were too risky to touch. But under this new order, digital assets are being treated just like any other investment choice, evaluated and offered if they pass fiduciary standard. In short, the final regulatory wall that kept crypto out of America's retirement system is gone. 401k providers now have green light to include Bitcoin and other digital assets. And that changes everything. So how much capital is at stake? Let's talk about it. So let's talk the numbers, because this is where things get truly insane. Right now, American 401k plans hold about 8.7 trillion. 8.7 trillion. And if you zoom out to the entire retirement system, so we are talking about 43 trillion in total assets. So now here's the mind bender. If just 1% of that capital, just a sliver, were to shift into Bitcoin, you're looking at roughly $430 billion in a new capital. So that's not retail hype money. That's deep, institutional, long-term capital flooding into the market. To put that into perspective, Bitcoin's entire market cap today sits around 2.3 trillion. So a single percent of retirement funds could add nearly 20% more value to the Bitcoin almost overnight. And that's before we even factor in higher allocations, spill over into Ethereum, or other knock-on effects for altcoins. Remember, Bitcoin is already trading near record highs, hovering around 120,000 to 123,000. Now 18 billions in fresh liquidity from retirement pipelines, and suddenly the idea of Bitcoin hitting $1 million in the next few years does not sound like hype anymore. It starts looking like a very real possibility. So from Bitcoin to $1 million. Okay, here's the roadmap from today's 120,000 Bitcoin to a future where it smash $1 million per coin. And it's possible, not impossible. So first, institutional tailwind with 401k pensions and even national reserves opening the door. We are talking about unstoppable long-term buying pressure. The second one, the US has created a strategic Bitcoin reserve, trading Bitcoin like digital gold for national security and financial stability. When governments start stacking, that's a whole new level of legitimacy. The third one, asset managers, BlackRock, Fidelity, and many other companies are already recommending 1 to 5% Bitcoin exposure into standard portfolios. That's not fringe, it's mainstream financial advice. And finally, the killer factor. Supply Bitcoin is hard capped at 21 million coins, and most are already held long term. When you combine limited supply with an avalanche of new demand, the math points only one way up. So that's why the $1 million target is not high. It's the logical outcome of everything now in motion. Of course, alt season is here. When Bitcoin makes headlines, altcoins quietly prepare for left off. And this is exactly how altcoin season begins. So here's the signal. Bitcoin dominance drops from 60% down to 40% and then 30%. That's when institutional money starts flowing beyond the Bitcoin. It's stacked into the altcoin. First the Bitcoin, Ethereum, large cap, and then small cap. Look at Ethereum. It just smashed through 4,000, the highest level we have seen since late 2024. So that's not noise, that's momentum. Even if you check Solana, sitting around $176, it's flashing pre-ETF energy. Institutions are barely touching it yet. That's your early mover advantage. And history is clear. When Bitcoin rallies, then slows, altcoin catch fire, Ethereum, Solana, and dozen more ride the wave, often with bigger percentage gains. Alt season is not coming, it's already here. The only question is whether you will ride it or watch it pass by you. So let's talk about strategy and risk management. Alright, excitement aside. So let's ground ourselves with strategy and risk management. The first rule is never go all in at once. Instead, use a dollar cost averaging. Spread your entires over week or months, so you're not gambling on perfect timing. The second one is don't just chase the top. Plan your exits. Set profit-taking milestones. For example, a little bit on 250,000 and 500,000, and scale out as the market matures. That way, you lock in wins while still keeping skin in the game. So when it comes to the altcoins, think of them as your space, not the whole meal. Limit exposure to 5 to 10% of your portfolio because altcoin can explode, but they can also implode just as fast. Security is non-negotiable. Keep your long-term holdings in cold storage wallet, offline, untouchable, safe from hacks. Exchanges are convenient, but they are not your vault. So and finally remember this, even as 401k and institutional open doors to crypto, this market remains incredibly volatile. Evaluate your risk tolerance honestly. Don't let greed or FOMO push you into the position you can't afford to lose. In crypto, discipline beats emotion every time. Crypto fam, this is it. You're living through history. Policy and price are aligning for the first time ever. Your retirement account can now legally buy Bitcoin. Billions in fresh capital are on standby. Altcoins, your light is free, compressed and ready to exploit. So if this does not light a fire under you, nothing will. So now I wanna hear from you. Are you adding Bitcoin to your 401k? What altcoin are you staking right now? Smash the like button. This is the kind of video that crypto fam needs right now. Subscribe, hit the bell because tomorrow we are breaking down the top 10 altcoins that could 10x this cycle. So this is Crypto Boy and fam. You're still early. Now you have got the strategic and the edge. Stay sharp, stay strategic, and let's ride these waves together. Okay, catch you in the next video.